The process of foreclosure has been around since they started our calendar. In other words, more than 2,000 years.
Thank you for joining us again today. I'm Randy, and of course, I'm here with Ted Thomas. Ted, good to see you again. Always good to see you.
Thank you.
Always really cool to see what shirt you're wearing for today. Colorful. Your shirt's almost as colorful as you are, kind of. Oh, it's like a death head on the back. Well, that's kind of, that almost plays into what we're going to be talking about here, Ted. Because I mean, there's some hard times out there. Obviously, some folks are facing foreclosures on their house, and that's it's a bad reality. But on the other hand, in business and such, it can turn into an opportunity. So let's talk a bit about that, about bank foreclosures and homes that are for sale. What can somebody do with that as a business
opportunity? Surprise you a little bit. In the United States, if you have a reputation for doing something, you can get a trademark on that. I actually have a trademark on the name Mr. Foreclosure. I actually own that name in the United States.
Wow.
Yeah, because I came from the foreclosure business. Now stay with me. I'm just going to reach back here to my library.
Okay.
I'm just going to reach back here and I'm going to give you a surprise.
Mr. Foreclosure.
30 years ago, I wrote that book.
Wow.
Look at that.
And let me tell you, that's how many pages is that book, Ted?
It's 480 pages.
Lot of good information.
It's not 480. Wait a minute. It's 457 pages. I missed by a little bit.
Can I also assume, since you wrote that book, that you even, made the process a little smarter, even more efficient, more effective?
Well, actually, the process of foreclosure has been around since they started our calendar. In other words, more than 2,000 years. So when someone lent money to a person and the person wasn't able to pay it, so the lender would create a mortgage, or in many states in the United States, they call it a deed of trust. When they lent that money to somebody, if everybody couldn't pay, because if they lost their job, or if they had a stroke and they fell on the ground and now they couldn't work, all right, so they couldn't pay for their property. When they couldn't pay their property, a foreclosure is nothing more than the lender taking their collateral back. All right, so the banks, everybody says they're mean, but you couldn't do it without banks. So the banks lend money. But the challenge is when we have an auto industry that shuts down, or the electronic industry, or the high-tech industry, when they collapse, as they do in a cycle economy that we live in, when that happens, a lot of people end up in foreclosure. So it's become a dirty word. And there's nothing dirty about it. These people didn't want to lose their property. Something happened in their life. They're not bad dudes. They just have some crisis. And their crisis is bigger than holding on to that house.
Ted, can I assume that obviously, so the lender, lent the money, the person just, for whatever reason, they can't pay the money back. So are all foreclosures, does that just mean the bank owns the property? All foreclosures are the same?
Well, the situation when the foreclosure started, so pre-foreclosure taking place, the bank owns the property. All right. So let's say most people, they haven't paid the payment. So the bank will give them many due process notices of default. This big notice of default, tack it on the front door. All right. Now, those people haven't paid for the property. So the bank will tell them, we're going to auction this house off on the courthouse steps. When they auction that house off, they're not auctioning it off for pennies. At the start of that auction is whatever the mortgage is. So if it's a $200,000 house and the mortgage is $190,000, that auction is going to start at $190,000. Would you want to pay $190,000 for a $200,000 house? I don't think so. You don't want that at all. That's why I gave up on that business and said, wait a minute, I'm going to tax auctions, $200,000 house starting at 10 cents on the dollar. Which do you prefer?
Yeah. Okay, that makes a lot of sense, Ted, and I see why you've been doing this for so many years. And I know
it's just a different perception. So if you go and watch television or you look across the internet, people don't realize when they're going to this auction, they're teaching people to buy at the auction, the bank wants their money back. So now let's take a $200,000 house. There's $100,000 owed on it. Well, if you got a $200,000 for $100,000, that's a pretty good deal. But if I go to the tax auction, it's $200,000 and I get it for 10 cents on the dollar. It doesn't take long to figure out that margin is a lot different. So you're getting
Well, I get the idea and it makes sense. But here's what I don't understand. Why would the bank that's owed all this money, why wouldn't they just go to the tax auction, pay off the tax and get their property back?
mostly because the number one, the county and the United States government will not let them go to the auction and buy the properties. The banks are in the banking business, not in the auction business. You and I are in the business of buying properties at auction, not the bank. This is for the Joe average guy that lives in the community. If you're buying tax auctions, you're going to start out, well, when I started 30 years ago, everybody just did it in their own community. Now you can do it all over the United States because we have the internet. So we can sit there and you can sit in Miami and buy in Seattle, or you could sit in LA and buy in Oklahoma City. But that when I started, you couldn't do that except by traveling all the way. And now you can do this whole thing online. It used to be when I'd buy properties when I lived in Florida, I had to travel all the way to Oklahoma City or Dallas or Houston or whatever.
So your expenses of doing your business have been reduced big time because just like you said, there's no travel expense. The time, that time you spend traveling, you could be investigating other properties, to perhaps invest in.
Well, here's an even better thing that's happened. You could sell it online too. You could use Craigslist. You could use the MLS system. You could use Trulia. You could use Zillow. We teach people 6 or 8 different ways to sell online. What about Facebook Marketplace? All of those places you could sell property online, sitting on your rusty dusty. Wouldn't that be nice?
Yeah, it's very nice. It sounds appealing the more you talk about it. Hey, this may be a dumb question, but I don't know what you call these tax deed auctions. Is there such a thing as a foreclosure property auction, or is that the same thing?
That's really a dumb question. Nah, I'm only joking with you. Seriously, there's 2 different auctions and people constantly confuse them. So I'm glad you brought that up, okay? Here's the deal. Most people have heard about foreclosure. They've heard about foreclosure because they're terrified if they get a notice, a piece of paper from the bank, and the bank says, look, if you don't pay, we're going to take your property away. You get a letter from the bank. That's a foreclosure. But locally, people don't realize that every county in the United States, people default on their taxes. Now, if you default on your taxes, they're going to send you 2 or 3 notices, and then they're not going to make a lot of noise. They're just going to confiscate your property, and they're going to come and kick you out. So that's happening in every county. Well, when the local government, the county, when they foreclose, same word, when they take the property, they're taking it at back taxes. And all they want to do is sell it to get the back taxes. You see, the back taxes is what pays the school teachers and the county employees and the firefighters and all of the police departments. So they have to have taxes. So the government locally doesn't want more property. They already own all the parks. They already own the swimming pools. They already own the roads. They already own the county building. They don't want any properties. So they sell those properties for 10 cents on the dollar. Here's your choice. Go to a bank auction and pay off the mortgage, thousands and thousands of dollars, or go to a tax defaulted auction and buy them for pennies on the dollar.
So you cannot be Mr. Default, Mr. Foreclosure anymore. Perhaps it's time to trademark a new name, Ted.
Yeah.
Mr. Tax Deed Auction or Mr. Tax Authority, Mr. Authority and all this stuff?
Well, actually, I've now got a different title, and it's Ted Thomas, and most people call me the Tax Lien Authority and Tax Deed Authority.
I learned from a guy named Ted Thomas, the Pied Piper of closing.
I made 2 times my yearly salary in that 6-month period.
It's a secure program. I wish I had known this years ago.